3K gold would fit, if we go up to that line, a 300K Bitcoin. So we have a lot of pointers towards that 300K Bitcoin from gold. At 3K would point to a 300K Bitcoin, but also equities, S&P at 7K would match that 300K Bitcoin. There is a range of uncertainty and standard deviation range around that point estimate of 500K, and that range is roughly 500K divided by 2, which is 250K, and times 2, which is 1 million. So 250K to 1 million range for the stock to flow model. 300K would fit right in there.
Plan B starts with the short-term reality. Bitcoin fell from $84,000 at the end of February to $82,000 by the end of March. That's not the V-shaped recovery many were hoping for. But despite this lackluster price movement, there are still several bullish indicators. One of the most important, the 200-week moving average, a long-term trend line that has historically acted as a key support level in Bitcoin cycles, is still trending upward, rising from $44,000 to $46,000 in just 1 month. This indicates that Bitcoin's foundational momentum remains intact.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Bitcoin dropped from 84,000 end of February to 82,000 end of March, and that is not the V-shaped recovery that we hoped for. However, the black line here, the 200-week moving average, is still going up from 44 in February to 46 in March. And that's a bullish sign. Also interesting, if we look at the geometric mean, which is also a moving average but calculated slightly differently because it fits better the logarithmic scales and the compounding effects of financial markets. But if we look at the two lines, the normal moving average and the geometric mean, they're very close together. And that means volatility is getting lower. Volatility was very high in the beginning of Bitcoin, and we see the lines separated from each other, and it gets smaller and smaller, and now they're almost similar. What does that mean? Does that mean there will be no more bull markets and also no more crashes and bear markets, and that we have a steady but upward going growth, which isn't too bad, by the way, because we have been growing from 20,000 to 40,000 and 40,000 to 80,000. So if that trend continues to 160 and 320, not that bad. However, we don't know that. It might be that the bull market is still forming and that the moving average will separate again, will diverge again from the geometric mean. One more thing on those two lines. Notice that you can't have a bear market, a big crash, when the 200-week moving average and the geometric mean are together. The big crashes here are happening when there's a diversion between the two lines. Also here in 2018, there was a big gap between the two moving averages. Same here in 2014 and 15. In fact, if we look at historical situations where the lines are together, that would be here at the end of 2020. That's when the bull market began. The end of the bull market, the FOMO phase. Same in the beginning of 2017, where the lines were together. So, moving average and geometric mean together could mean the bull market is about to start. We're seeing, of course, the S&P going down from 6,000 to 5,000, and Bitcoin also going down from the 100K to about 80K. So that's that positive correlation again. Both go down, both go up. In my opinion, when S&P will bounce back, when the markets have adapted to Trump's tariff policies, when it bounces back to 6,000, Bitcoin will probably be above 100K again. And in fact, if it's a question of when rather than if the S&P grows to 7,000, that would fit a Bitcoin price of 300,000. So gold was $1,000 in 2015, and it's $3,000 right now, 10 years later. So it's that same 3x that the S&P did. And Bitcoin, of course, going from 400 to 100,000, 250x in that same period. Nice positive correlation with a high R squared, just like stocks. So gold, yeah. What it does normally is if gold goes up, Bitcoin goes up. And of course, behind all this is also the dollar and the money printing. So the dollar loses value. It's called inflation. And everything that cannot be printed by governments, like gold, like the S&P, and like Bitcoin, goes up. Now, recently, we saw gold pump to 3,000, but Bitcoin fall to 80K. So that's a question mark. Is that a break of this 10-year-old positive correlation? Is Bitcoin going its own course? Or is that just an outlier, a gold outlier, that will probably bounce back to that line? I think the latter. I don't think this 10-year-old correlation will break. And by the way, note that a 3K gold would fit, if we go up to that line, a 300K Bitcoin. So we have a lot of pointers towards that 300K Bitcoin from gold. At 3K would point to a 300K Bitcoin, but also equities, S&P at 7K would match that 300K Bitcoin. The stock to flow model predicts 500K for the 2024-2028 halving period. It's an average level. And just like last halving period where it predicted 50K and it turned out to be 34K, which is pretty close, there is a range of uncertainty and standard deviation range around that point estimate of 500K. And that range is roughly 500K divided by 2, which is 250K, and times 2, which is 1 million. So 250K to 1 million range for the stock to flow model, 300K would fit right in there. And of course, stock to flow thesis that scarcity drives value is still very true. And I think it's first principle, right? It's scarce things are more valuable than non-scarce things. And in this chart, if you don't know this chart, you see Bitcoin over time, and you see the other assets, silver, gold, and real estate. And in fact, you could say this is Bitcoin over time, but in fact, you could also see it as Bitcoin phases. So this is the first phase. This is the 2012 halving, the first halving. And until that time, Bitcoin was, well, an IT proof of concept, basically, with less value than $100 million. So then in the next, after the 2012 halving, in 2013 and 14, miners came in, ASIC chips came in, and more exchanges entered the market. So the market grew, Bitcoin adapted, and the market grew to a $10 billion market cap. It's a totally different animals with the miners and the exchanges. And then In the next cycle, in 2016 till 2020, the market grew even further with more legal clarity and clarity about forks. So if somebody decides to copy Bitcoin, it can copy maybe this proof of concept phase, but it cannot copy all the miners, investment of all the miners, and also not all the exchanges. So very important for Bitcoin, this phase. And with all that clarity, then the last phase, 2020 to 24, well, retail investors really jumped in and brought this Bitcoin asset to over $1 trillion market cap. And that's where we are right now. And that brings Bitcoin on the radar of institutional investors. So they don't look at anything less, any asset less than $1 trillion. It's nothing. Even Bitcoin right now, it's really small compared to, for example, gold, which is more than 10 trillion. It's probably 20 trillion at the moment with the current prices, and real estate, which is a 100 trillion plus market. Now, the interesting thing is that Bitcoin scarcity right now is twice gold's scarcity. Gold is a stock-to-flow ratio of 60, and Bitcoin has a stock-to-flow ratio of 120. It's even higher than the stock-to-flow ratio of real estate, which is around 100. But the value is much less than gold and real estate. So, in my opinion, Bitcoin is very much undervalued. And in the future, when and that's logical, right? Silver, gold, real estate are really old investments, assets, classes that people have known for thousands of years. And Bitcoin is new. People don't understand it. There's a lot of people that still think Bitcoin is a Ponzi scheme, or that Bitcoin is for criminals, or that Bitcoin is bad for the environment. It is not. So over time, when people learn to know what Bitcoin is and get familiar with the asset, I think the only thing that can happen with value and with price is going towards that line and towards the other assets. Right now, it's very undervalued.
PlanB also warns that we'd only start worrying if the 5-month realized price dropped below the 2-year, an event that has historically marked the start of bear markets. For now, that's not the case.
If we stay on chain, like stock to flow, we look at realized price. Right now, the realized price, the total market realized price, is 45k. It's 44k, and that's up a little bit from 43. If we look at the 5-month realized price, that's only the last 5 months, buyers that bought last 5 months, the cost price would be 91k. That is, of course, those buyers are on average in a loss, because Bitcoin is lower than at 91, it's at 82. Now, if you look at the medium-term 2-year realized price, I like the 2-year realized price. I think it's the most usable, because the total realized price has all the Satoshi coins, the 1 million Satoshi coins from the beginning, valued at 0. And it has all the lost coins. That's also millions of lost coins from the old days, all against low prices. So it drags that realized price down. And the very short-term realized price is very influenced by, short-term movements. So I like the 2-year. 2-year realized price is at 75,000 right now, up from 74 end of February. In profit. So on average, people that bought last 2 years are in profit because they bought at 75 and Bitcoin is now 82. So really, I do not see much pain in the market. Most people are in profit, and that's quite healthy, quite bullish in my opinion. Note that I would be less optimistic if that yellow line, the 5-month realized price, would cross the 2-year realized price, would be below the 2-year realized price, because that usually is an indication that the bear market has started. And we're not there yet. This here, you see it as well in 2018, yellow crosses blue, or here in 2014, yellow crosses blue. It's not the case at the moment. Yellow is at 91, blue is at 75. So, now the most important chart. I made this chart in 2022, just after Bitcoin missed the 100K mark, and I failed to see that as well, and to not be as late to recognize it. I made this model. It's built on on-chain indicators. It's proprietary, so you don't know exactly what it is, but the outcome is interesting. It shows red, so we're still in a bull market, and not in a distribution phase. There's no yellow dot yet. And yes, it's a very weird bull market so far. It's flat. It's much flatter than historically, and it's long, more than a year old. I think that has everything to do with that premature all-time high here when the ETFs were introduced at the start of 2024. Since then, we're in this red bull phase. It's weird, but it's not yellow. And by the way, even if there would be a yellow dot, it's not that clear as all the other dots, right? If yellow flips to green, it stays green, and that's the bottoming out of the market. And then if green flips to blue, the accumulation phase, that stays blue, and it doesn't flip back. But if red bull market flips to yellow distribution, it could be a bit noisy. Like in 2013, it flipped to yellow, and then a couple months later back to red and raging bull market again. Same in 2021, and that was so confusing in 21. So the bear market seemed to have started after China banned the miners, and then the bull market seemed to have started again, and red dots came back, just to be followed by more yellow dots, and then the real distribution phase, and later the bear market started. But so right now, no yellow dots, still red dots, and ready to go.
PlanB shares his proprietary on-chain model, created in 2022 after Bitcoin failed to hit the 100K mark. This model color codes different phases of the market: accumulation, bull, distribution, and bear. Today, the chart still shows red dots, indicating we are firmly in a bull market. No yellow dots, which would signal distribution or the beginning of a potential top, have appeared yet. While this current bull run feels unusual, flat and prolonged, PlanB believes that's due to the premature surge in early 2024 driven by spot Bitcoin ETF approvals. But the cycle remains intact. The model suggests we're not done yet. Please like and subscribe.